This chart shows a summary of our trading activity on the Euro contract for the last couple of weeks, starting on about October the 14th. And this is exactly the chart that you'll see in the trading room. And on this chart, the first thing that you should recognize is that I've highlighted areas of support and resistance. Support are indicated by these blue horizontal lines, and the areas of resistance are represented on these red lines. And the more narrow, the smaller lines represent a shorter time frame area of support and resistance. And in this case, it would be a short-term resistance area. And so to begin with in this discussion, to give you an idea about how we use both options and futures to trade these contracts, we began at support initiating an open call position. Had resistance here on the very short-term time frame, and at this point when we're trading, I mean, we never know that perhaps that might be a top in here that could lead to even lower price action. So to hedge off that possibility, I like to initiate a futures position and at least pick up part of this to help me finance keeping this open call position open if this indeed is a trend to the upside. And let me show you the short-term time frame so you can see what we were working at the time. So this is just looking at a very short time frame. This area in here is basically this area here. And so you can see where we entered the futures contract and how we worked that futures contract down for a couple of hours until we reached an area of support, which is where I would expect this retracement to occur. This is a very consistent, very reliable pattern that I like to participate in. So we hedged off that little bit of a retracement here. We picked up 40 points, and we could apply that to carry in this open call position. The market continued to the upside and advanced up to our target resistance area, picking up a fair amount of profit in here. There was a span of about 200 points on the euro that we picked up by having these open call positions. When we reach these areas, in this case the areas of resistance in red, I look for patterns to confirm whether or not this area is going to hold or if the market is going to continue through them. And I started to see this topping formation. Even though we went above it a little bit, we started to place sort of a classical head and shoulders type of pattern in here. But the most revealing thing is these long bars here to the upside that are very brief. These are 60-minute bars, and so we see these areas here where that often coincide with stop running, which basically always occurs at major pivot areas. And that's a very revealing thing that I've seen for years, and it causes me to think that in fact we might see a change in trend here. And that was the reason why I initiated a new put position here, in which I indicate here. Came down to intermediate support here, in which we initiated a futures position, thinking that we'll at least look for a little bit of a retracement of this advance coming down to the downside. Very reliable, very much a part of the ebb and flow of these markets. And so while we're net short for a very short period of time, we picked up a few ticks on the future side to participate in this normal, very classical pattern. We continued to the downside here, creating a bit more profit on our open put position, and it was here that we reached an intermediate area about the time in the afternoon when we shut down. And this is the reason why I wanted to hedge off this little possibility of a retracement back up here to resistance with a call contract, with an option contract, because I never like to leave my desktop with the futures on. And so that was the reason why I initiated a call position, and then when the market started to continue in our initial direction to the downside in the favor of our open put position, I closed those calls out. Very short term, but I just wanted to see if we could participate at least back up here into this resistance area. We didn't. We didn't until the next time. Started to come down here, made a lower low, but we really didn't on the momentum indicator. and oftentimes that coincides with a bit more of a retracement, which we did right up in here to resistance, in which we participated again with call options and finally making our objective. And this is all shown in the trading room. We also show which calls and which puts we use. But this is a summary to just kind of give you an idea of the general methodology so that you can perhaps qualify whether or not you'd like to learn a little bit more in our trading room. But finally, reaching support down here with our open put position that we initiated up here, we closed it. Again, coming back down almost about the same distance as we initiated to the upside. So just a wonderful way to participate. We cover 4 markets in the trading room. We cover the euro, crude oil, gold, and the S&P. We trade them all the same way. What I just showed you here is basically the trading approach. We just apply it to 4 different markets, and that diversity gives us a chance to always have something that we're working on. So there may be a day or two where there's not much action on the euro contract, and there is in gold and crude. And so it gives us a diverse array of instruments that we could always participate in these markets. And so you can see here that a lot of my trading involves options, but I do use the futures in a very short term to participate in the retracements. But I find that the options enable me to participate with less risk, because I choose strike prices that are far away from when I initiate. But as the markets, and if we're fortunate enough to where the markets move in our favor and get closer to those strike prices, the greater the delta becomes, and actually the rate of change of the instrument that I selected increases. And if it starts to go against me and away from the strike price I selected, the rate of change decreases just when you would want to. So really, it creates a great advantage. Now, with every advantage, there is a countermeasure. And a countermeasure with buying options is that there is risk in time decay. The amount of time that we hold our option positions, time decay really is not a factor. But utilizing the futures contracts to participate in these retracements and adding those ticks to the account and applying those to the risk of the open option positions, it overall, I think, is a great way to offset much of the risk that's associated with trading the futures contracts. The best thing about the option positions is that if you create for yourself a synthetic short position with a put option, it really removes much of the anxiety of holding a futures contract short. It is bars like this that can really cause you a lot of discomfort holding a futures contract where the market's starting to spike against you, because you never know. While you never know with an option position on, the tick by tick consequences are not as great, are far less with the options than they are with the futures. And so it really enables me to participate and work through these type of things. When you have a position working in your favor, sometimes holding a futures position short when you have this kind of retracement, even though you plan for it, and it's not something that you haven't seen before, it really does. It's hard sometimes to hold on to that. And so I've tried to turn the tables on that kind of feeling by being proactive and saying, well, I'm going to participate with the futures when it's starting to go against my open option position. So it really has put me in a different, more aggressive position in the times in which I would be, otherwise worrying about a net short in here. So it really is a nice mix of these two instruments to participate in these markets.